December, about 25 minutes after 12. We're here for another edition of Chart the Markets, and we have lots to talk about today because it's been an active day in the market. And before we start, I do want to thank our good friends at FEG Token and smartdefi.com. I suggest you head over to smartdefi.com and see what you're missing out on. They're the kings of tokenization. And also, our friends at BYDFi. They're our exchange partner, and if you head over there and enter our referral code, you're eligible for $50 trading bonuses we give away a week to our new users. I'm also going to do something a little different today. I'm actually going to give away a 30-day subscription to give you access to the indicator script that we use in our sessions here. And I'll tell you how we're going to do that in a little bit, so you can kind of prepare yourself for that. What we're looking at is this daily chart of Bitcoin that at one point didn't look too healthy today, and then all of a sudden had a little bit of a run. But I want you to just kind of take a look at this move as you see it so far. And as this was unfolding, it was the sky is falling, where does it end kind of conversation. And it's incredibly, incredibly anxious for a lot of people. That, it's the fear of the unknown that gets us every time. And the takeaway is that don't fight the trend. Don't fight the direction that price wants to go in. Make friends with it. You're going to catch more bees with honey. Just make friends with it. And what I mean by that is when the trend is down, obviously down. Let's look at the weekly here to take some noise out. But when you see this, right, and price trading below the 5 EMA, which you see here, and the T line in yellow, there's really no reason that you should be going long. Just don't fight it. Inhale and exhale with the market. Otherwise, you're just going to choke on catching falling knives and always finding yourself on the wrong side of the trade. So don't fight what you see. And if that means closing your mind to the narrative that you might get caught up in, then that's what you have to do. Because that's the noise in your head that keeps you from making objective decisions on the chart. Don't fight the trend. We show you on different time frames each and every week how you can identify, for example, this trend down, and what do we see here on the weekly? Couple things. Where do we find support? Upper value range. Price rolls over, and these wicks it's up from here. It's a place it's been before. Now, we don't know if this is going to be a breakout and we're going to move to the upside and take out previous waves highs. We have no idea. But what we do know is that this really is the first wave down on the weekly that you see here. And now we've had 3 relatively positive weeks. So the only thing I'm wondering is, hey, is this going to just be the first retracement in a continued downtrend? I don't know. But I'm going to inhale and exhale with the market. And I'm not going to try and front run it. And where price typically will be finding areas that it either gets that support or resistance, we point out to you all the time. This is the upper value range. Nice little pop. Is that very tradable? Absolutely. But just keep in mind, we haven't broken through, even with today's huge candle on the daily, we haven't broken through the 5 EMA on the weekly. In fact, well, we have, but we pulled back and we're trading beneath it. We still haven't challenged the T line. So the takeaway is, do we have positive price action on the daily? Yes, we do. But what is it converted to on the weekly? We're still sitting at what looks like the first wave of a downtrend and a simple retracement to the upside. We have no confirmation that it's broken out yet. Now, if we add just a little bit of context to this chart, 20, 200, 50, yeah, I'll put those in 500 and 1,000. Oops, and the 100. What did we talk about last week and the week leading up to that? We have to be careful now that price has broken through this level, because we break one level, we find the next. Well, here's an example of a move down right at the top, a retracement higher, failure, move down, retracement higher, failure, retracement higher, failure, retracement higher, failure. Like, what are we doing here? We're, even on the daily, we haven't broken out, quote unquote. Do we have a buy signal? Absolutely. But we have a lot of work to do. We talked about this. This 500 MA is going to prove as substantial resistance for price. Is it trending higher? Are you making these higher lows? Yes. So that's obviously a good sign. But just be conscious of the resistance on the chart. Because in order to monetize it, we have to be aware of where the risk is, because on the other side of that's going to be our opportunity. You break through the 500, the opportunity is the 50 MA and then this lower value range up here at 101. Get into this gap, and that helps make it easier for price to get up there. But it has to break through one level in order to find the next level, just like it had to break a level to find the next, and so on and so on. And this really isn't all that complicated, is it? Because here's a really clean example showing you the breaking of one level and the finding of the next, the breaking of that level and the finding of the next. It's pretty, if you just kind of let yourself follow the trend and not fight it through narrative and trying to long red candles. If you just go with the flow, let the market come to you, the trend is your friend, all of that stuff. It's actually not all that hard to see where price is going both up and down. And this is a skill that if you learn it, you'll never lose it. And we were talking before we came on air a little bit that, there's young people are concerned, like our AI is going to take all the jobs. There's nothing going to be left for me. What am I going to do? There's a lot of people that, at the beginning of the pandemic, maybe you were starting college or university and then your classes got postponed and delayed and then you had to work from home and everything just got sidetracked. And there's a lot of people that feel lost and they feel helpless that they don't know how they can earn a living. Or even, make a little bit of money that would be the equivalent to a part-time job. Well, what we're showing you here, if you take the time to learn it, nobody will ever be able to take it away from you. And your job is to simply monetize the chart. That's it. That's the job. And you don't need any unique training or special training to make that happen outside of what you can learn. And these charts tell us everything that we need to know. The answer to a lot of your problems are right on your screen. Having the ability to monetize what you see on a chart. And it doesn't matter if it's oil or Bitcoin or Nvidia or Apple. It doesn't matter. As long as you have the ability to understand how to read price on a chart, you're going to be able to monetize that chart. Whether it just, you're trading stock and you're buying commons, or you're using options, or you're trading crypto. No one will ever be able to take this skill away from you, ever. I went through the same stuff. Just like everybody else. I'm a human being too. When things kind of look bleak and you're trying to figure out, how the hell am I going to earn a living, or how the hell am I going to make a few bucks? This is how you can do it. It's literally not that hard. And if you take the time to learn it now, especially when you're young, oh my God. The opportunities that you'll have just through the simple understanding of how to read price on a chart and how to execute a trade, you will find you will always have the ability to make a buck. Always. And you don't have to have a degree in mathematics. You don't have to know you don't have to work in a bank. You just have to have the ability to block out everybody else's noise and focus on what you need as an individual. Like, why are we here? We're here because we're trying to help enrich our lives. To do better, for our kids and our families than we walked into. Those are all great reasons to be here. But this is also kind of serious stuff. You're dealing with money. Your money that you work hard for. That's why we spend so much time trying to demonstrate how to mitigate risk. Because, we want you to keep as much as you have. It's one thing to earn it, it's another thing to keep it. And this is Bitcoin's monthly chart. And I think it was Rico that pointed out one day that, holy smokes, on the monthly chart is all you had to do was buy that signal that showed up on the monthly in April of 2003 and then walk away. Because price just went parabolic. How did you know? How long do you stay in the trade? Well, you just follow the trend, right? That's all we're doing. Like, this is kind of as simple or as complicated as you want to make it. Can you get in the weeds and try and figure out why this happens and how come the market went up and how come the market went down and it should have gone up or it should have gone down because someone said this or someone did that? Oh my God, I'm going to get a headache. We see how price moves all the time. And we talk about it all the time. Break one level, find the next. Well, all that support is now resistance, and now you're seeing, again, how long it can take for price to break through these areas. Yeah, we're up, 3.4%, but we're not out of the woods either. So these things take time, and sometimes you feel, hey, we're well on our way. Here we go again, and then you know what? For some reason, everything just kind of stops and fades and pulls back. Here's the 4-hour. Was there a lot of work to test on the 4-hour? All these levels of resistance? Yeah. What do you notice on this 4-hour chart? Bring it into range for you. Is this the first test of the 200 MA since it broke way back here on the 28th of October? Yeah. So what should you expect on this time frame at the 200 MA, which is our most basic bull bear indicator? What should we expect? A, rejection, or at least some kind of sustained resistance for a little while. That's what you should anticipate as a first test. Now, if it blows through it with momentum and starts running up, to this level in here at 102.2 and then upwards of 105 to, well, then the takeaway is a little bit different, right? That's obviously a very exuberant parabolic move, and the takeaway would be that, wow, someone really wants this. But so far, 2 hours into this 4-hour candle, we haven't blown through it. So you're getting the resistance that you would expect, knowing that first touches have a higher probability of failing. And this is how you can kind of balance the anxiety of that intraday price action. When you have an understanding of what to expect when price gets to certain levels, all of that, the fear of the unknown goes away. So as I watched price, preparing for today, and as I watched price run for the 200, do I want to hit the buy button impulsively because it looks like those massive candles will never come back, right? No. You just look up and let them do their thing, knowing that that's the first touch of this 200. And you just wait for your opportunity and wait for the market to come to you. You don't react to what you see instantly on the chart. And if you're using our script as an indication of, to use it for entries, I love the 4-hour chart to try and sneak an entry in on the daily. Sometimes they run, sometimes they don't. But was there any indication in here that price was going to do what it did today? Not a lot. We were pretty sideways. But if we back up our time frame a little bit, where does the 1 hour shoot? Here it is. So here was our buy signal on the 1 hour at 6 a.m. this morning. Didn't look like anything was going to come of it, really. At least not a lot. There's your rejection. See the resistance of the 50? Look at it. Reject, come back to what? The 200, and then bang. Price takes off. Now, are you going to chase this candle, or do you want to be in back here? It's up to you. I prefer this. Do they always do what we see in front of us? No. But to get, there was an early entry here. That's all I'm trying to say. And you catch it by just backing up your time frame. So do you have support from the 20? Absolutely. Like you can see today, you literally wicked it. And you can see what your resistance is on the daily. And when you flip in your volume profile, because now we can see where the trading has and has not been, it just gives us that additional tool. If I break past this, I'm going to run for the 50, and I should be able to do it with some velocity in this gap. Roll over here and you come back to the 20 and possibly take out the previous wave's low, because that would be a failed breakout. Right now you're trying to take out, which you kind of have done, these highs. So now that that's taken place, you're going to reset and take another run, or are they going to take that as the cue and your next candle opens above the 500, so above resistance, towards the gap? Those are the things you have to look at. And why no one can take this away from you is because it just doesn't really change. Can you read this? Excuse me. Can you read that breakdown? Of course you can. Can you read this breakout? Of course you can. Don't trade the chop. Look for the breakouts and the breakdowns. That's all you have to do. Look for green candles at the 50-day moving average on any time frame. Those often produce great results. But don't fight the trend. Like I hear this from a lot of you, I'm having a bad week. Well, why'd you have a bad week? Well, every trade I took just kind of went nowhere and reversed on me right away. So you were longing? Yeah. Longing in this? Oh, I guess so. Well, when you see this divergence, even if there wasn't a candle on this chart, when you see that divergence and all this air, which is momentum to the downside, you don't want to be longing. Well, I was trying to pick a bottom. Well, that's not the job. Why would you wanting to be picking a bottom as the thing looks like it's falling from the sky? It's going to hit a concrete cloud on the way down and just stop? No. Just do what you're told. Right? Our job is not to front run the chart. Our job is to follow the chart. There's no extra points for front running because it blows up more often than not. Just follow. Any time frame you want to trade, just follow. There's your 15-minute Bitcoin chart. Now, when you see all of your major moving averages tight like this, you know that what comes out of it is going to be parabolic 9 times out of 10, right? It's just more elastics twisting together, and then when they unload hard. Where's this price? If only we had the volume profile and that's it, you can see you're getting a lot of support right at the point of control. Right? Get a nice clean signal, green candles at the 50, thank you very much. There's your insurance that you pay, right? As the market's trying to figure out, do I want to continue to fade or run for the upside? Obviously it was the upside. That's what you're looking at. That's the candle that you entered on. Is that still a bullish chart? Yep. It is. Because all of this divergence is telling us that there's still momentum. There's still money coming in. Enough to keep these areas diverged from one another. And as long as, and this is why, so if you were trading the 15-minute chart, which a lot of you do, was that the top? Nope. Would a lot of people shorted that top? Yep. Only to get this. What do we talk about? If you think you've missed a trade, oh, just wait till it comes back to the 5 EMA or the T line and then bang, it goes up. What do we think's happening here? We're trying to do what? Take out this high. And when you take out that high, this move down is just a simple pullback in what would be a continued uptrend. Understanding full well that when this does fade, you have to come back and check these levels, right? That will happen eventually. But if this continues to run, these will continue to fan out. So you'll have like the 20, the 50, 200, 100, they'll just continue to fan out, and you check them on the way down. Just like, we did here, and so on and so forth. So you love these parabolic moves to the upside when you catch them. Great opportunity off this time frame. But I mean, once you're in, like now you're ahead of the game. Right? Now you're ahead of the game. And when you're looking at a different time frame, like this 15-minute, for example, if this does roll over, you're going to come back to the 20. And that's a hard drop, and you don't want anything to do with that. So you're totally fine to stay in this trade as long as these are diverged to the upside and price trades above those levels. Like that's the long and the short of it. No pun intended. And we can see on the, what are we looking for on the hourly chart? We're looking for up here probably. So that's the 1000 MA. The amber line is 1000 MA on the 1 hour. And if you look to the left, you see this bench of past price. That's in play. So current price in this current candle is looking for past price because it's attracted to it like a magnet. It was looking for this past price. Now it's found it. So now it's looking for the next level up. Break one level, find the next. Does it mean that you go straight there? No. Like you're allowed to, nothing goes straight up or down, so you're allowed to move up and down. It's just trending in the direction. But that would be a level that it wants. Pretty simple stuff, right? We don't have to do any advanced math. It's all done for us, right? What we do understand is that everything we're looking at is based on math. So essentially is a language unto itself. Right? If you believe math is a language, this is a derivative of mathematics, thus a language unto itself. And it's our job just to interpret it. Look where Solana got its support off this level that we had dropped down, which ironically you can see it wicking. This is a 1000-day moving average just showing up recently. Look at the wicks through it. Bang, bang. Giant green candle. What's the candle looking for? It's looking for past price. And we're being shown where that past price is and has been. It's looking for the value range, lower value range, the 50. And you can see through here the structural level, like buyers and sellers shaking hands in the past. That is where it is most likely to go. So if the trend up continues, that's what it's going to want. Now, would this be the first touch of the 50 since it broke it on the daily? Yes. So you would have to anticipate a little bit of resistance or a failure. And it's completely reasonable when that happens. And you can see here, it did it here. Test and fail. There's the breakout, fails again, right at that structural level. But this is what it wants now. And if it doesn't get there and it rolls over at this kind of same level that you can see it attempt before, it's going to do what? It's going to come back and take out the previous wave's low. The comfort you have is that this is supportive, right? If that was to happen. Fail that supportive level, however, and then you have it's a different conversation. We don't want to fail 1,000 days of price history. You want to try and avoid that. Just ask oil. Here's CFX. Same thing. You notice now we're getting all this resistance kind of price activity, and you get your hopes up, you get a nice green candle to test. This one could have been another example, and then disappointment. So let's not get ahead of ourselves. But where was the sign? Right here. That's Sunday on CFX on the 4-hour chart that you got a buy signal. What are we at? Tuesday? And today's the day that you're really starting to get some big price activity. Again, the 4-hour gives you some insight into what may happen on the daily. Obviously, here's your resistance at the 50. Look at this, was a wick and a total failure. So here we are again, bang, 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 until you finally catch a bid. But if you're in down here, can you allow this to unfold? Yeah. Like if you're in on this candle, you can allow this to unfold without the risk of being stopped out too early or being washed out. you don't want to make the trade up here. This is again an example of don't long into resistance without confirmation. This is why. But if you get a good entry and you know that the 50's here and you can anticipate, because it would be roughly the first touch, second in this case, but you can anticipate what happens at resistance. You would anticipate that if you fail the 50, what do? You come back to the 20, level by level. You know, this breakout here is why you waited. But you bought yourself the benefit. You bought yourself that luxury because you had a good entry. What does price want on the 4 hour? Look to the left, all that past price, and here's the 200 MA, also in line again. Look at this, right? So it'll want to test this level. It's not the first attempt at the 100, but it hasn't tested it very hard. But nevertheless, you know, you could get a little bit of resistance here, but ultimately that's what it'll want. Aster, same thing. Let's look at the 4 hour. Do you remember how excited everybody was when it was doing this? Oh, this is the one that's going to take out that old high. No. Right? You hit the 50 and it was just allergic, and price rolls over. Do not fight the trend. Do not fight the trend. Accept it and learn to monetize it on the way down. Right? You can't, if you're only trading long, is all you're going to be doing here is just pouting because you'll have nothing to do, because you can't make a trade and be profitable unless you're short. And if you're short because the trend is down, you're going to have all kinds of opportunities to enter. All kinds of opportunities to enter because your T-line and your 5 EMA are diverged to the downside. Like here's your impulse down, testing the T-line and the 5, but nothing happens, right? So this is your going sideways. Impulse down, sideways. Where do you kick off the move down again? Right in at the 5 EMA and the T-line, and boom, it all starts again. Do not fight the trend. Right? Like for myself, I just want the meat of the sandwich. I just want the stuff, right? This is what I want. And this stuff. Right? Where are you going to get resistance? Probably up at some major moving averages and benches of past price. Where do you want to take your trade off? Probably up in those areas. No value in hanging on. Look at this. Yep. So this is a failed breakout. You roll over and you take out the previous wave's low. How about that? Why round trip that? Doesn't make any sense. Right? So again, if you're going to take away something from this stuff and put it in your toolbox so that nobody can take it away from you, let part of that be, don't round trip. You're long, as long as the chart lets you be long, and when you hit resistance and it looks like, you know, it's going to roll over, well, guess what? It's time to short. And that's how you monetize the chart, both up and down. But do me a favor, don't start with the 5 minute. Thank you very much. Start with the longer time frames, right? So that you don't get caught up in mania. Use the longer time frames and drop the lev. If you're using too much leverage, you'll never have an opportunity, even if you're on the right side of it, to manage any sort of mild retracements, because that'll just stop you out, or in some cases even liquidate you if you're using too much. So just relax, okay? Don't fight it. Just if the chart's short the chart. Simple. Here's XMR, which is Monero. Is this the first attempt of the 20 since we broke it? Yes. Is it obvious resistance? Yes. So you just have to take your time, be patient, and let the market come to you. Now, for all you folks that like to follow the crosses, what do you see here on the 4-hour? You'll see the 50 in blue about to cross down through the 200 in red. Now, I understand it's a 4-hour chart, but if it was a daily, you'd be saying, uh-oh, there's the death cross. So there's that. This is a lot of resistance. When you see the 50 and the 200 together, that's a lot of resistance. So, once you break through the 20, this is going to be a whole other story. It will be both the first touch of, the 200 in red, since you broke it here, and also the first touch of the 50, since you broke it up here. So you have two situations where you're going to find, in all probability, some real resistance. What does that mean? Well, let's look at the daily. Where's the 20 on the daily? Right at 390. What's 390? There you go. That's 390 on the 4-hour, is right in here. That tells us that that's resistance on the daily, and those two averages are resistance on the 4-hour. My expectation is that this wave, you have this wave down, you have a couple retracement candles higher, but they don't break trend, and then you roll over and take out these lows. It's not advice or anything like that. It's not financial advice. It's just the series of ifs. Right? We've seen how price has done this before. Right? The upside is you break out like here, and you take out these highs. That's the upside opportunity. But I just feel, knowing that the 50 and the 200 on the 4-hour are basically at the same level, yeah, it makes me feel like you might get a little bit of a pause there. And you'll see that price has kind of moved up through this volume gap, and that this starts to become the shelf level. Well, shelves are where you might find some resistance. So it's just kind of overlay all of those best practices onto what you see on your chart, and that helps you, make an educated decision, or as educated as you can be. This is the weekly chart. What's the downside? There's your 20, there's your 50, there's your 100 and 200. We do not necessarily have a change in trend to the upside yet, but that's a nasty red candle that closed well below the T line. That's last week's. This week's candle is trying to test the 5 EMA, right? That yellow is the T line. So it's trying to test that. If it doesn't break it, then you roll over again. If you do, and you probably want to take out this high again. But that's the downside risk. And there's lots of it. And that's what happens when you go parabolic. Let's look at XRP. Where's XRP finding support? How important are these levels? Very. That's the 500. So the pink is always the 500 MA. This is the 500 MA daily. And look at the support it's getting. And here, you whipped this level that we dropped down at 190 a couple times. And again, price has been there before. That's the only reason we put it there. So if it's been there before, there's a strong chance that it'll find it again. Doesn't mean it's going to stay there. But as a trader, when you see things like that, and you've got these levels, and you see price falling, does it hurt to put an order in there? No, not really. Or at least pay attention to when it hits it, because there's a likelihood it could bounce, and that's what it's done. So the upside is, now that you've you're finding support here from 500 days. You're looking for this 50. And ultimately, this is the lower value range, and you've got the 200 and 100 up in here. And this gap, which is also in here, if price can get north of the 50, it can run into this, into this gap to the upside. Just like it falls through it to the downside quickly, it can also run up to it quickly. And this is why I like to use the volume profile, because it's really going to help you find the areas where the money hasn't been, whether you're trading long or short, so that you can trade in and out of them, knowing that price typically moves through there with some velocity, right? And if you're shorting something, we know that the short side can really, when it gains speed, that stuff happens pretty quick. When that's the case, and you've got that gap combined, price falls really hard. So this is a nicely supported chart here from the 500-day moving average. You're literally 1, 2, 3, 4, 5, 6, 7 touches of it. Now you're north of the 20, right? You want to get above what you had as resistance. Ultimately, this is what you need to break, right? You broke the ice back here. This is the ice hole failure. You fall through the ice. Look how hard it is to make your way back up to it when you're sinking. Easy say, hard do, right? So here we are right back at our 215 level that we dropped in there. That's this blue line, horizontal line. Why was it there? It's there because it's an area that price has been before. So if you're trading this, you really hope you can kind of get up into that neck of the woods. And then you got the POC way up here, right? So this is one big gap that you have to deal with if you can get into it to the upside. And that would be fun. That would be fun to trade. And the nice thing is that because you've got these areas of support and resistance laid out, you've kind of boxed in a range. You've boxed in price. And again, this is a daily, so there's lots of trading moves in here. But once you've got price boxed in, and you know where that high level is, and you know where the low level is, boy, you can have a lot of fun. But you have to have the right frame of mind when you go into it. If it's only, oh my God, I believe in this so much that it's going to be the world's currency and it can only go higher, you're going to have a headache and limited success, because you're going to be so focused on simply trading one way because you believe in it that much. And it's okay to have beliefs, just don't let them get in the way of what the market is trying to tell you. So I want to show you this NVIDIA chart because the thing just can't really stay out of the news, not through any fault of its own. But yesterday, you hear something about chips that China can buy. We're going to let you buy these chips. That was like, the people that I was talking to was like, man, this is going to make this thing go parabolic, and we're going to head off and make new highs, and this is the kind of momentum that it needs. Does it look like that's what happened today? Like, we could have had a parade on the news. We only care about what money does. We don't care about what people say, and it doesn't matter who they are. Remember, there's two kinds of people, lion tamers and how many lion tamers have you met lately? And that just goes for the world. Focus on what money is doing, not what people are saying. The only thing that's important is what the money's doing. This is not the reaction that was reflective of what the news was. This chart is simply trying to make it above the 50-day moving average. That's all I care about. And it either will or it won't. The only way we can find out is just to get an idea of what we're dealing with on other time frames. The daily doesn't look so great. Does the weekly look terrible? Not necessarily. Right? Not necessarily. Not enough that I want to buy it, but it doesn't look horrible. Like you've had this move down and you have a couple weeks of green candles. Have you triggered a buy signal? No. And if this fades, what happens? And there's a reason why I like showing you the weekly charts is because it takes a lot of the noise out, and it's a little more accurate to trend, I think, than some of the nonsense we can see on dailies, especially now with all the volatility. But if you look at this daily, and it does not break, or weekly, and it does not break out, right? I don't like these concurrent wicks at the top. So if it fails, and this thing rolls over and tests the 20 again and fails, takes out this low, puts you into this gap. And in all of this gray that you see on the right here, that's light trading. It's light trading with this gap inside of it. What do you think happens then? Does price take its time making its way down into that gap, or does it happen lightning quick? Typically lightning quick. So if this fails, this 50 is in play. I think it actually is already, but that's just me. If it does get support here and continues to move higher, which it could, you're going to do what? You're going to take out, or look to take out, those previous highs on the weekly. And then, of course, what's happening, we're going to have people saying, oh, we've got a double top and all that stuff. And, they could just be two equal points in price that just trigger a retracement and then price moves higher. Like, we don't know what comes after the other candle. Is that we just have to be able to interpret what the risks are and opportunities are. Opportunity on this chart, you bounce at the 20, you take out or run towards the previous highs. Risk, you fail the 20, fall into the gap, find the 50, hope that you get support because it would be a first touch. But if you don't, you find the next level down, ultimately the upper value range. And then the point of control is way down here. It's not an issue today. At one point in time, because this is dynamic and it changes with time and trading, you'll see how much closer as a POC rises, that you do come back and check all these levels. I just don't expect it to happen down here. But you do, right? Look at Bitcoin. That's what happens. Time and time and time again. This is strategy. Let's go to the daily quickly. So, was it worth trying to long it in here? No. None of those candles was a bottom. And you knew that if you use our script, right? Because you're understanding how the trend is being shown to you, and you know when it's safe to go back into the water. This is the first day that it's safe to go back into the water. And are we guaranteed that this is going to kick off, a move to the upside? Not necessarily. Because why? This is why we use multiple time frames. This is the 50-day moving average on the 4-hour. Is this the first test well, we haven't actually made it yet, but would this be the first test? Yes. And what do you expect? You expect resistance or failure. There's a higher probability on the first attempts, right? Remember our friend Carpathia, the first mouse gets the squeeze, the second mouse gets the cheese? That's kind of what we're looking at here. Where was your buy signal? Way back here on Tuesday. Tuesday the 2nd. That was your buy signal. We don't know what comes after the next candle, but that was your buy signal. And even though price did pull back a little bit, you found support at the 20, which is what you had to have happen. And the beat went on. And it's looking for the next level up. Just like when we fail, we look for the next level down. Well, now we're looking for the next level higher. But please understand, you don't break every single time you approach. It's a process. You might break one or two of these levels, and then all of a sudden on the third one get a big headache and retrace, and then have to start all over again. That's the process. And it's our job to be okay with it so that we can monetize the chart. If, by whatever means, if you went short, like, I love these big points, right? Like that. When you see that happen and you go short, like, was there any reason not to stay short? First attempt at the 20, what happens? You failed. Try again, fail. My teacher would say, it's like, okay, it's like you're trying to ask somebody out. You ring on the door, you get rejected. You go back and you get flowers and chocolate. You try again, you get rejected. And so on and so on. Eventually, you'll get through there. You're going to go through a hell of a lot of flowers and chocolate on the way. Doesn't matter the time frame. It doesn't matter the asset. This stuff repeats over and over and over. What does that mean for you? It means you can trade whatever you want because you'll be able to chart whatever you want. It doesn't matter. United Healthcare. Now, this is an interesting chart. And my views on this stock haven't changed. I believe it wants a certain level. Do you guys know what that level is? Those of you that know me, it's $200. Did that sound batshite crazy at 600? Yeah. But where are we? What happened on the chart? So these two big train tracks, this one splits everything in half. And this was an earnings week. But I don't care about earnings. I don't care about that stuff. That's just the people that do the speaking. The opposite of the lion tamer. That's just how they talk. I don't care about what they put in there. I only care about the chart. Right? Charts don't lie. People do. There's the gap down. This is what you'd be looking at. Yeah, that's is that your doji at the top of a bull run? Yep, that's what it is. And there's the next day's candle. We don't like dojis at the top of bull runs because usually it means price is going to reverse. Or at least it's the end of that little leg, right? But this was a complete and total capitulation. Again, I don't care about the earnings. Doesn't matter. This is where you actually get your signal because the move was so monumental, right? At all through this on the daily chart, did it feel like, oh, I missed the boat? Did you miss the short? No. As long as you see this divergence between these two levels, that trend is down. Like, here's your first attempt to the 50, gaps up, breaks through. That's good, right? And I think there was some news there. There's the 200. First attempt of the 200. Came close to get a sniff and said, yeah, I'm not interested. That's the market telling you that I'm not ready to go bullish yet. right? That's the 200 MA on the daily. That's our most basic bull bear indicator. Doesn't want it. What happens? You break one level, find the next. Break this level, find the next. Oh, you get 3 or 4 days of green candles, but did you break trend? Nope. And what happens? This is a failed breakout that rolls over and does what? Takes out the previous wave's low and breaks another level in doing so. First attempt of the 50, fail. Now, that's not healthy, right? What's it look like on the weekly? Because everything is fractal. So, you know, as price fell back in here and then made this mild recovery on the daily, that's not enough to change the trend or your opinion on what you see on the weekly. Like, this is still a very bearish chart. And it's all that happened in here. This, by the way, is the point of control. So just like we showed the point of control on NVIDIA, that looked like it was 6,000 miles away, that there was no way in hell that you could ever reach it. Hello, there it is right there. That's the thin red line, is the point of control. You don't even see it up here. It's way down here. That doesn't even seem realistic, does it? But what you realize is things that don't seem possible can become possible. The first target of 268.54 was hit on that week. You struck right through it. Sideways. Can't break the T-line, and you pop down again. Now you're at resistance, right? What happens at resistance? You can't break this. There's nothing of meaning happening here. And then what happens? You point out, which is an indication that there's momentum to the downside, and you start all over again. Does this look like it wants to fail the 20? It does that. It does today, and it's only Tuesday. I get it, but it does today. Couldn't break the 500 doji candles at the top of that. Retrace to the 20. Nothing happening here, and now it's going to roll over. And here's your point of control. Is price attracted to those levels? Yes. So look to the point of control at 300 to see if price comes back there again. Again, this is the weekly. If this is part of a larger failed breakout, well, then you got a problem, because you're going to come back, not just take out these lows, but I mean, you got to look down here again. And ultimately, let's take a little bit longer look. What's down here on the monthly? The 200 MA. Did you break the 20 on the monthly? Yes. There's the ice hole failure. Split through 100. You're looking for the 200. It came close, almost tagged it, but I think that's what you're looking for. These are levels, right? We're not playing pin the tail on the donkey here. That's not the game. If this was a 15-minute chart like we showed a few minutes ago, look at this failed breakout on the monthly. Right? Impulse down. Here's your bounce. There's your touch of the T-line. This candle literally wicks the 100-day moving average and runs away like a scared little girl. Now you've broken the 5 EMA. You see this kind of hooking and all that stuff. You've broken the 5 EMA, and again, I'm sorry, but I think you're looking for that low. And it's fractal, yeah, so this is a monthly chart. It's going to take a while. But the trend to the downside hasn't been changed yet. Obviously the weekly it has, because it's a shorter time frame, but now you've kicked off another sell signal on the weekly. You don't play around with weekly sell signals. Not on this script. You get one to the short side, you better pay attention. You get your ass kicked if you're not on the right side of it. going to show you something else. This is called Omnicom. Advertising agency conglomerate. Don't worry about what you see up here. That's for a friend of mine. But look at this top. Broke the 20. Broke the 50. What do you think it's looking for? Here's your failed breakout, right? Impulse down. Sideways. You pop up. You wick the 50 on the monthly and you completely roll over. And again, you came back and you took out that low. And I believe you're still looking for the 200. And if you don't hold it, what happens? You look for the next wave down. And you look for the lower value range. Or don't be surprised. And look what's running into that level on the monthly. You got 500 days. Time and price will come together. You've had support through here, but if you don't get it, like there's an obvious channel here, but if you don't get it and you fall into this gap, this thing is trying to hang on for dear life to this level, this along the point of control on the monthly here, because if it falls into this gap, it can drop with momentum. Right? And if you do a little research, you'll find out that there's a game being played that makes some of the players pretty vulnerable if things don't go their way. Let's take a look at oil before I forget. This is our daily oil. And where are we? What happened here? So like last week, I heard some people saying that energy's about to break out. Really? What made you think so? Why would you say that? Because on the daily chart, all you're doing is you're running into the 50-day moving average that it actually has a literal allergy to on the daily. So I'm not going to say out loud that we're breaking out when you're showing up at resistance like that. That's not a confirmed breakout. All you have is 3 days of positive trading. Congratulations. What do you look at on the weekly? See this? And I'm sorry, I've got all this stuff lit, but the divergence between the T line and the 5 EMA on the weekly is still fully diverged, telling you that there's still, on the longer time frames, the ones that are really the boss at the end of the day, there's still more downside. What do we really want? Price wants what it's had before. It wants this level. Met somebody on the weekend that has been, an oil bull would be an understatement. I can talk too about why I like things, but at the end of the day, did the price go up or down? Honest question. Just want an honest answer. The fact of the matter is, the price went down. What's this? Failed breakout, maybe? At resistance? Pay friggin' attention, for crying out loud. How do some of these people get their friggin' jobs? Come on. Kidding me? How hard is this? What do you think this wants? It wants what it had before. That's 500 days. It's had it here. It's had it here. It's had it back here. And here it is. And it's going to have it again. Get your head out of your ass. Read price on the chart. I'm starting to have visions of all the analysts in 2008 telling me that everything was okay. Are you kidding me? They don't have a fiduciary responsibility to know what the hell they're talking about? Read price on a chart before they open their mouths. Start there. And forget all the other shit, because that's what it is. This thing, here's a quarterly chart of oil. I don't know, that's the 200-day moving average on a quarterly chart. Does anyone in the room other than me think that's what it wants? Of course it does. Might not stay there, but that's what it wants. And you gotta bloody hell hope it holds, because if it doesn't, you got a bigger problem. But the reasons why, and how come, and what if, who gives a shit? The only job is to monetize the chart. These are the tools that no one will take away from you. So that one day you're going to be the idiot saying, I'm sorry, I don't see $100, although it traded as high as 95 this month, or this week, whatever it would have been. I kind of see something different, because I'm able to block out the noise and not listen to you idiots talk about what you think is going to happen when the chart is telling you in its own language what it's going to do. Just pay attention for 5 minutes. That doji at the top of a bull run, as those short-term averages point out on any time frame, is the signal to get the hell out. Or at least start planning for it. Because you're trading above all your support. And you're spitting out a doji like that. Wake up. That should be your alarm clock. Break one level, find the next. Break one level, find the next. Where was it going to go the whole time? $61.66. Right back here. Why? Because it's been there before. Did it sound like you were batshit crazy at $100 or $95? Yeah. But that's, so what? As long as you know how to read price on the chart, you're not going to be able to save those other guys. They are there for you to take their money. So stand up, pay attention, and take their damn money. Who cares how dumb they are? Who cares where they went to school? Who cares what they say? No one gives a shit what they say. It's all about what money does. Lion tamers, lion you-know-whats. Charts don't lie. People do. And I don't care what I'm going to hear from the oil mafia, but I'm sorry, you're going lower. Just like I told you at $95 you were going lower, but you didn't want to listen. And I wasn't going to tell you more than once because I'm a big boy and that's not my job. Unless you pay me. Then I'll give you my opinion. But this is by no means anyone's, this is a short trade. I don't get it. Like, shut up about what you think is going to happen. Who cares? Monetize the chart. If that's your strategy and that's your thesis and you want to go all in, then go all in. Knock yourself out. But the chart's told you the entire time what it's doing. This monthly chart since August of 24 has been bearish. Not a long trade other than what you see in these retracements, but I mean, it's not a positioning thing at all. And we could show a million charts like this, right? Whatever, it's only, the only thing that matters is the price on a chart. Everything else is irrelevant. What's the dollar doing, or DXY? If it breaks the 50 to the upside and can break through the 200 here, it's going higher. And what's it going to do? It's going to come back and challenge these tops and all of this price through here. And if it breaks through there, what do you think it's going to do? It's going to look for past price. It's not rocket science. It's just what happens. This is the 10-year treasury. What's happening? What's it looking for? It's broken one level, or it broke two levels. found the next, broke that level, it's looking for the next. It doesn't matter what I think or where I believe interest rates are going or why. Who cares? Price on a chart, man. That's what you got to monetize. Your pontification about what you think, what direction the world's going to spin in, you can't trade that. It's useless information on a macro scale. How are you going to use any of that stuff? I believe interest rates are going here. Now what are you going to do? Now you got to go trade something. Is that helpful? Not really. Not in the grand scheme of things. At the end of the day, what's the chart want to do? The 10-year weekly. Buy signal on the weekly chart. So what does that probably want? I bet you any money it wants to test this level where you see this trend line, where you find the 50-day moving average and the 100-day moving average. Why? Because it's been there before. We're breaking one level. We're looking for the next. It's not that hard. Rinse, repeat, rinse, repeat. And then you do this enough times and you're like, yeah, you know what? Hey, hon, I don't think you have to have that part-time job anymore. We can kind of accomplish this from home. Do you want to join me? Might be fun. Sure. Now you mean we don't have to pay the babysitter and I don't have to pack a lunch and pay for parking? No. We're just going to do this. Think we can make a 75 to $100 a day? Yeah, probably. I guess it all worked out then. But that's not an option for you if you don't know how to do this. The greatest gift you can give to yourself is to learn how to read price on a chart, because it will literally change your life. It will open up opportunities to you that you never had before. And yeah, are your friends going to tease you? Maybe. Mine did. Oh, what'd you learn? Buy low, sell high? No, I learned where the low was and where the high was. And how to make money in between. Oh. That's all that matters, is what you do, not what other people think you do, or say that you do, or think of what you do. One job, monetize the chart. It doesn't matter what the asset is. It's all very doable. Here's your chart for gold, monthly chart. Does this chart still look bullish to you? It does to me too. And it's all you had to do was pay attention, and you could be monetizing the whole way. Here's the weekly. Gotta love the weekly, right? Look at, I love this. Buy signals off the 200, gotta like that. Because why? Because the 200-day moving average is our most basic bull-bear indicator on any time frame we're trading on. So, nice green candle off the 200. Yeah, you got my attention. And it's gone nowhere but up. And it gets support where you want it to get support from. Telling you that, this is just a continuation. Price retraced. You got support at the 20, and it's just a continuation. And you did what? You rose and you took out the previous wave's high. Another continuation off the 20, and notice your T line and your 5 EMA stay diverged. Plus the support. That's a bullish chart. Now we understand that when the time comes that conditions change, and because we know that we're not going to trade up here forever, we're going to come back and test this level just like we did here and here and here. And one day, it won't hold. And it'll fail the 20. And it'll kick off this type of move to the downside ultimately, where you're checking all these other levels. Doesn't matter what the asset is, it's all there for you. And I know it looks impossible to come back and look at all of those fanned out averages and think, hey, there's no way, right, that you can come back and check them all, but you do. It's just how price moves. We can see on this daily chart, the Bitcoin chart, that we got to deal with this level. If you can get above it and you can start to test the next level higher, all right. But you have to be indifferent to price. You don't care if price goes up. You don't care if price goes down. The job is to simply monetize the chart. I know D-Wave, I think Rico's friend, was looking at D-Wave. What's the resistance on the daily chart? The 50. And, we haven't even tested it yet. This is the first attempt, so you have to expect to get some resistance or a failure. If it fails, let's say this rolls over, you come back to where you've been before. And hopefully you bounce, you take another run at it, and maybe that's the one, the second mouse that breaks through. If you roll over and you don't hold that level, then you come back and you take out the lows. And then that puts the 200 in play again, because you haven't hit it. And we just take the same approach, and we just look at all our different charts, and we come to use the same process each and every time. It doesn't matter what you're looking at. It just doesn't matter. Target. There's 1,000 days of price history. Back here. It obviously hates it. And look at these tests and fails. This looks horrible. I don't really ever look at this, so this looks really bad. Here's the monthly. And massive melt right back to the 50. Don't hold it. You come to the 100. You challenge the 50 and fail. Right back to 100 and fail. Now you come back to the 200 and are failing, putting the 500 in play. Now this is a weekly chart, or monthly chart, so this stuff takes time to unfold. But man, this is not nice looking at all. I gotta get off of that. I can't look at that anymore. Anyways, here's strategy on the monthly. There's your 50. This candle here, although you've had about a 5% day, just shy of, you're nowhere near challenging these levels. So this impulse down, if you're going sideways and not challenging, that's weakness, regardless of the time frame. Could be an hourly, and I would say the same thing. So if you're learning this, take it seriously, because this really could make a difference in your life. No one's going to take this away from you. Nobody is. And the only thing is that you'll just get better over time. You really will. The more time you put in, the more that you apply the simple rules that we have, the more that you use the script to help you get those early buy and sell signals, you'll be all over this stuff. And no one will be able to understand, like, wow, how come this guy... Well, this will be why. Now, I said at the beginning of the stream, we're going to give away some access to with the script today. And is all I would like you to do is, if you're not connected to me on X, follow me on X. If you are already, great. And here's what I'd like you to do. You just tell me why you would like to use this script and how you think it can help you. And I will pick one lucky winner, and you will have 30 days of access, and I will even help you set it up and kind of, give you some one-on-one time to help you kind of get comfortable. But that's all you got to do. Just send me a note on Twitter, connect with me if you're not already, and I will pick one of you and give you access to the TradingView script. So I look forward to hearing your responses. And this will be it for today, and we're going to reconnect on Thursday. We'll pick this up because I am really curious, as I'm sure everybody else is, where this Bitcoin trading goes from here. Right. The nice thing about doing these live sessions is that we can come back and check receipts. So the 500, as we indicated, was going to be the level that we're going to get resistance at, and we need to break through in order to really trigger off something special here. So let's see what happens by Thursday. So take care, everyone. I look forward to your responses. It's at Blip420, and I'll talk to you next week.